Peter Cardillo is now joining us to give us some perspective of what we're seeing. Peter, great to have you back on the show. The last time we spoke was also when inflation numbers were announced. That was a pretty high figure as well, about 7.1%, and now we've come to 7.5%, accelerating even faster. Give us a sense, is this being pushed up by wage inflation, or is it still global supply shocks?
I think it's in part, global supply shortage obviously is behind it, but wage inflation certainly are a problem here. And we saw that in last week's employment data. And so this basically suggests that structural inflation has gained traction. And so you could make a good argument that transitory inflation due to energy prices and food prices will probably come down, but that's probably not going to happen until maybe the beginning of the third quarter of this year. So we still have 4 or 5 months of inflation probably rising. I don't think that it will accelerate as we saw it in the past month or so, but I do believe that we'll see still higher inflation rates. And so that brings us to the question as what will the Fed do? Well, if we get another dose of high inflation in the March-February employment data, then I think there's a good chance that the Fed may actually raise rates, that is at liftoff, raise rates by 0.5 percentage point, which would mean 50 basis points. And so that, would send a strong signal to the market that the Fed really means business to fight inflation. And of course, that would simply mean that yields would probably go a little bit higher than where they are now. In fact, if you look at the 10-year, it did touch 2%, and now it's backed off somewhat. So I guess that suggests that the markets want to just wait and see what happens with the wage inflation data in the next labor report.
Yep. So if the Fed needs to push a little harder, is that what is spooking markets this morning, Peter?
Oh, absolutely. I mean, that's one of the reasons. Look, up until yesterday, the markets were the stock market was reflecting on earnings, and even this morning, out of maybe 20, 30 key earnings reports, most of them beat, even Disney, and that's probably one of the reasons why we're seeing a comeback here in the Dow right now. We're certainly far from the lows of the opening. So, I think you'll have a day or two of inflation fears, and that'll be brought on by climbing yields. But then I think investors go back to the basics of the market, and that basic fundamental is earnings. And so far, it's been a pretty good earnings season, taking into effect that most companies have beat, and the important factor is that guidance has been strong. And in some cases, we even had an increase in buybacks.
Yep. So we are seeing, like Peter said, receding of that fear with the U.S. markets, with Wall Street focusing back on earnings. The Dow Jones now still in the red, about 140 points, but definitely off the lows that it saw on opening. Thanks so much, Peter, for joining us today and giving us that perspective.